At the top of this broadcast, what I'll do is give you a broad sense of what Finance Minister Nirmala Sitharaman has attempted in this budget and walk across to the India Today Business Intelligence dashboard. And on this, we'll take you through how the government is essentially trying to concentrate its spending in fewer areas. So rather than increase spending across sectors, what the government is trying to do is concentrate where it wants to spend its expenditure gunpowder in the hope that there will be tangible results in the years to come. That's the government's big hope. So what I'll do is I'll start, for example, with some of the social sectors like education and healthcare. Despite all of what's happened with the pandemic, there isn't a big increase in the allocation for the healthcare sector from a revised estimate of 85.9 thousand crore rupees to 86.6 thousand crore rupees in this year. So healthcare spending expected to be flat. Education important as well, where because of the pandemic for 2 years, education of children has taken a big hit. The government expects that this year it will spend 1,04,000 crore rupees in education in comparison with 88,000 crore rupees in the last year. So an increase in the education allocation. After this, let's come to the Swachh Bharat scheme. So I'll come and take a look at some of the Prime Minister's pet schemes. And this again will give you a sense of how priorities are changing. If you look at the past allocation under the head of Swachh Bharat Abhiyan, which was say 8,000 crore rupees in the last fiscal to 9.5 thousand crore rupees in FY23, which essentially suggests about 1,500 crore rupees extra. These numbers are important because it gives you a sense of the priorities of Finance Minister Nirmala Sitharaman. And if I come now to the Awas Yojana, for example, and take you through how the allocation for the Awas Yojana has actually virtually stayed the same from 47.4 thousand crore rupees in FY22 to 48,000 crore rupees in FY23. Essentially a big increase instead in the allocation, for example, on pipe water, which is very clearly the government's current priority, and they're hoping to have pipe water pumped into people's houses, especially in rural areas where pipe water isn't so common. From there, let's now come to the disinvestment target. Remember, if you look at the disinvestment targets which were announced, grandiose announcements in previous budgets, the actual realization was much lesser. For example, in FY21, a target was set of 2,10,000 crore rupees. In comparison with that, actually only 16% of the target was achieved. In FY22, the target set was of 78,000 crore rupees. 15.5% has been achieved so far. There is still some time to come. So if the LIC IPO does go through, some of those numbers could increase. But for the next year, and that's the data right at the end, the target that's been set is only of 65,000 crore rupees. The target last year in the budget was 1,75,000 crore rupees. So they've actually brought it down just to 65,000 crore rupees. And I'll ask some of the guests who will be joining me shortly about whether the government has lost its appetite or they're just being conservative in the hope that they can over-deliver. So we'll work with some of the ministers joining us in this broadcast and get their sense on what the government's priority really lies. Let's look at Manrega, where again there is a high level of economic distress, especially in rural areas at this moment. Despite that, on Manrega, the government has actually cut the allocation down. The budget estimate is of 73,000 crore rupees being spent, as opposed to 98,000 crore rupees last year. So you've actually seen Manrega funds being slashed. So as I said, government concentrating spending, and this is something that because of populist pressures in the past, governments haven't typically done. They tend to increase allocation for different sectors, just bit by bit, marginal increases, so that it seems as if all allocations for all key schemes are going up. What this government is doing is concentrating spending in few areas rather than spraying the expenditure bullets, as it were. From there, let's come to the defense to GDP ratio. And this is interesting because at this moment we have a massive face-off with China along the line of actual control. Tensions with Pakistan are continuing to simmer. If you look at the expenditure on defense as a ratio to our GDP, it's only 2.1% according to the revised estimate put out by the government in the finance bill that was laid out. Now, the interesting thing here is the government's claim is that we're getting more bang for the buck. We're getting a higher ROI because we're spending more wisely. We're also spending more on Atmanirbhar defense purchases. So 2/3 of the weapons purchases will be from the domestic sector rather than purchasing blindly from abroad, rather than importing weapons, make them in India as part of the Atmanirbhar Bharat project. And that's a key hope. But as far as, for example, if I were to compare with a country like China, our defense expenditure, really, the economy of course is much bigger as well, but our defense expenditure much lesser in comparison with a country like China. From here, let's now come to highways, and this is important. When we look at the infrastructure sectors, highways is important because if you look at the government's hope, they're hoping that they will build 25,000 kilometers of road network in the next fiscal. Whereas the budget says that in FY22, only 11,000 kilometers of road network was built. So in comparison with that, this is a very sharp increase in the government's target for building new roads. And Nitin Gadkari and his team will really need to up their game. In the last year, they were troubled on account also of the pandemic, the lockdowns, migrant laborers going back home, and therefore the inability to get work done. But this is a big increase in the target that's been set. From here, let's look at the fiscal deficit, which everyone in the money markets looks at very carefully, which indicates how profligate or how conservative the government hopes to be in its spending. Here, rather than more expansion in the fiscal deficit, the government is actually hoping to pull back the fiscal deficit from 6.9% in FY22 to 6.4%. So, if you look at these numbers arranged over a cycle of say 5 years, you get a broad sense of where the government's priorities in this budget have been in a manner that's easy to understand and distill. And that's really what we were trying to do on the Budget Intelligence Dashboard. I want to go across to some of the initial voices joining us on this broadcast. Let's welcome Ajay Singh from SpiceJet. Uday Shankar joins us, formerly of Disney, current past president of FICCI. We'll get some political voices as well. Let's first go across to Ajay Singh and get his sense of the overall take on the budget, and more specifically for the travel and tourism sector. We saw air turbine fuel prices increased by 8.5% this morning. The airline industry has been in distress and in turmoil on account of the pandemic. Are you hoping with the Omicron numbers now starting to ease that you'll be able to see a big increase in the number of people traveling in our airlines again?
Well, firstly, as an overall comment, I think this is India's first e-budget. And the reason I say that is that, of course, everybody has spoken about this massive hike in CapEx, the 7.5 lakh crores that have been set aside for CapEx. And that's a fantastic thing. And of course, will lead to great growth and great trickle down effect. But look at the number of times digital has been mentioned in this budget. I mean, there's digital in just about everything, in education, in health, in logistics, in skill development. There's a digital currency, there is digital rupee, digital universities, one class, one TV, so 5G. So a lot of focus on digital and on technology, drones for farmers and so on. So I think really India's first e-budget. I think you were talking about the fiscal deficit, and I think the finance minister has rightly decided that we need one more year of fiscal stimulus, which is why I think even though the deficit has been pared down a little bit to 6.4, it hasn't been drastically reduced. So I think overall a great budget was lots of things on ease of doing business, impetus for the gift city. This whole Atmanirbhar you were talking about, the defense expenditure, to say that 68% of it will be reserved for the Indian sector, that has great trickle-down effect as well, in terms of developing defense infrastructure, production infrastructure. So overall, I think a fantastic budget, even on stuff like agriculture, this whole, thought of promoting oil seeds, which is where the largest number of our dollars is going in terms of importing.
Okay.
So very good. But of course, it's been a very, very difficult time for the civil aviation sector in the country, and Omicron has what happened was that as the virus abated, the second wave abated, we saw a sharp uptick in demand, and with Omicron, it went flat again. It went down again, and we are hoping that as Omicron recedes, demand will increase. But of course, we do need to address the taxation structure around aviation. You cannot treat it like a sin good. You want aviation to connect different parts of your country, especially the remote areas. You want aviation to also help you carry, cargo when no other mode of transport works. So you cannot tax it as if it is a sin good. Today, out of every 100 rupees that we get by way of revenue, 22 or 23 rupees goes as taxes to the various governments. This is completely unsustainable.
And the important thing is that wasn't changed in this budget, unlike the expectations which the aviation sector, for example,
there is something in the fine print which says that custom duty has been reduced from 10 to 5%. I doubt that has a direct impact on ATF pricing, though we are still trying to get clarity on that.
Uday Shankar, one of the critiques of this budget has been that it doesn't help the urban dispossessed, those who were most impacted by the pandemic, those who are still trying to recover, and you're actually seeing the government talk about a 25-year-old horizon, whereas the likes of Chidambaram are saying, what about those who need help now? Do you think the government has taken the right approach by focusing more on capital expenditure rather than on revenue expenditure?
So, Rahul, thank you very much first of all for having me here. But to your question, we would ideally wish that all problems were tackled immediately and in one budget. But in the real world, that's never going to happen. Government has a set of huge challenges. We are coming out of, and we are not out of it yet. We are, hopefully we are coming out of a, highly devastating pandemic, which has devastated the economy and has devastated the lives of people. So you need to rebuild that. You need to strike a very fine balance. But you also cannot let go of the fact that there is a future beyond today and beyond this year. So I think at the risk of sounding provocative, I think the government has struck a really fine balance here. I think the strength of this budget is that there is there is not too much of tinkering around. There is not too much of tokenism in the budget. The government has been very focused that let's do a few things, but whatever we are doing, there is consistency. What was some of the big things that were announced in the last year's budget, there has been an attempt to build on those. Then there is generally building up the infrastructure, as Ajay was saying just now. It's an e-budget, and again, it goes beyond tokenism there. And then there is even beyond digital, there is focus on things that we need to start looking at as a society. It was refreshing to see the finance minister talk about concern for mental health. It is refreshing to see that the finance minister was talking about giving encouragement to organic farming, and all of those things. Focus on logistics, focus on building these Gati Shakti centers. All of those things are important because how long can we just keep saying, okay, what is in it for the poor? If the country doesn't prosper, we can keep talking about the poor, but the poor will not prosper either. And it is this sort of very tactical, very sort of insincere, if I can use the word, insincere appeal to people's emotions that has accumulated some of the problems. So to that extent, I think it's a very sharp and focused budget, and it just tries to address. It recognizes the fact that not all problems can be handled overnight, but it tries to build a framework within these over the years. We can move faster towards resolving those issues.
Let's get a perspective from the opposition as well. The Congress party was alleging that the government didn't focus its spending on providing succor and relief. But the counter argument can be that they're looking to spend on productive infrastructure projects, which is where this massive increase of 35% on capital expenditure will go, which will have a multiplier effect in the years to come. And therefore, it's not a short-term populist, you've got elections in Uttarakhand, Punjab, Goa and Uttar Pradesh budget, but a budget which actually looks out into the future and hopes to deliver returns in years to come, Dr. Singhvi.
Rahul, let me say that there does not appear to be either fizz or pop in this budget. It is lost in minutiae. It therefore misses the bigger picture. In that sense, it's a flat budget. But let me start by saying there are good things in it. Certainly, the good things are, for example, the electric vehicle issue, the swapping policy, the 60,000 crores which are supposedly now given for access to water, tap water, the health, the National Digital Health Registry, generally for health providers and also in particular for mental health. These are good things. Increase by a few large amounts of money for 2 lakh Anganwadis. So these are minutiae, which is good. But let me tell you why the big picture has been missed. Now, for that, very briefly, Rahul, what are the 4 or 5 major problems you have till today? And you had it right from 16-17, pre-pandemic. Problem number 1, GDP is on a consistent decline. I don't want to bore you and your viewers with the figures. You know, from 16, if you take, every year there's a decline, down to 4%. And Arvind Subramaniam, this government's earlier advisor, said that the 4% figure is suspect because the base series has been changed. The second problem is lack of fiscal injection. 10% you say that you have done of the GDP, but actually 1.7% of that is a direct fiscal injection. Till now, everything has been monetary. Third problem is a real serious one of employment. People just want to debunk figures, average from 8 to 9%, and rural slightly less are the figures. Fourth is price rise. I said yesterday that, like Ghalib said, na khuda mila na bisale yaar, you did not increase the fiscal deficit by a fiscal injection because you were scared of price rise. You did not give cash in hand because you were scared of a price rise. You anyway have got a price rise. The WPI index is somewhere around 12%, and the CPI by one estimate is 5.3, and somebody says more. So, and the last is the rationalization of the GST. Now, given these 5 things, what has the budget done for these 5? That's the real macro question. What have you done for employment? The only answer you will get is PLI, PLI, PLI. Now, PLI has done very well for mobile handsets, I concede. But if you see carefully, all of the PLI is about technology focused industries, digital. There is hardly any PLI involved for a labor generating youth employment in particular, but labor generating generally. Point 1. Now I'm talking of the critique of the current budget in the context of the past. 2. You just now said fiscal injection. I'm happy there is capex. But you know, Lord Keynes said in the long run, we are all dead. Nowadays with COVID, we may say even in the middle run, we are all dead. Now, capex generates some effect over years. You have to do something on a revenue basis today. None. Third, GST, I was astonished yesterday, Rahul, and I don't think most people know this figure. There are 3,200 tariff changes over the last post-GST period. That's 3,000, not 300, 3,200. And it has gone incrementally from 13 to 18%. You want to get China is supposed to be losing markets because of whatever you call it, international and corona. Do you think those people are going to land up here? This is the best way to woo investors? These are the macro problems. I don't find a single address of any of these. And ultimately, unless you address every budget, you have an estimate and you have a revised estimate. What's the point of saying 8.5%? By the way, every time the budget is now falling about 7.7% behind the prediction for the next year. So this 8.5 anyway, I would say somewhere around 7.5 to 7.7. But look at your past, and you know, COVID, very unfortunate, is providing you an excuse because your 3 years prior to COVID up to the end of 2019 were pretty dismal. I have the figures: 8.26 in 16, 6.8 in 17, 6.53 in 18, and 4.04 in 19, which your own former CA just last week doubted because of the new series index change. So you are finding that pre and during COVID, the same things which you done in the last 4 budgets have not worked. Why is the GDP going down before and after? Well, you Jollywood should do something new now. And that is my problem with the budget.
Okay. I want to get a word now from one of the cryptocurrency operators in the country. Sumit Gupta joins us because so far people were trading in cryptocurrency without any clarity about whether it is legal as an asset, whether it's even legal to be buying or selling cryptocurrency, and whether it needed to be taxed. Now we're seeing, Sumit, the government announce a 30% tax on crypto assets. It's clear it won't be a currency. The finance minister clarified that.
Yes.
And the idea that there will be a digital currency, an e-rupee, the name is not decided, but there will be a digital currency the RBI will come out with this year. Do you think this will make people more confident? At least we know that there is a tax and we need to pay that? Or do you think this would make people wary because of the high value of tax that is being imposed in crypto trade?
Rahul, overall, if you see, I mean, the clarity on crypto taxation is quite positive and healthy for the industry overall. Everyone has taken it positively. What it signifies to me is that there is no intent to stop the crypto trading activity in the country, but rather to carve out some sort of guidelines and around taxation of this asset class. But there are some provisions, as you rightly mentioned, which are onerous for the industry. Like 30% tax is a higher slab rate, I mean, which is quite exorbitant, right? And might be counterproductive as well in some sense. I feel that there's also, and from what I can get the sense from the industry, like people are not very happy with the higher 30% slab rate. Plus, there's 1% TDS, which is also not very good. I mean, how in terms of market makers coming on the platform, adding to liquidity, I think this is will add layer of complexity when it comes to traders. And I don't know the reason why there is no offsetting allowed or you can't carry forward the losses. So I think this is quite onerous, but happy that overall it's going in the right direction. A slightly bittersweet, but largely positive.
Okay.
But the way I look at it, this is
Thanks, Sumit, for joining us.